Okay, learning objective 4 discussed the preparation of a financial budget, which includes the income statement, the balance sheet, and the statement of cash flows. Once our operating budget is complete, we have a significant portion of the numbers that we need to prepare these budgeted financial statements, but we're still lacking a few other supporting documents. Namely, we need to understand the schedule of cash receipts, cash payments, and capital expenditures. And so once we prepared the operating budget, the next step would be our capital expenditures budget, our cash budget, and then we have the information that we need from all of our supporting documents to pull these numbers into a set of financial statements. So let's just take a look at the final requirements for preparing those financial statements, but with a different company. Let's look at Humble Company. We have some information about this organization, their total sales, their purchases of material, payment of labor, payment of overhead, their budgeting and administrative expenses, and then we have some additional information about Humble Company, their capital expenditures, for example, for a new manufacturing equipment. They tell us that their cash receipts are collected. 75% of their credit sales are collected in the quarter of the sale, 25% in the second quarter. Of their direct materials, they're going to pay 50% of those in the quarter purchased and 50% in the following quarter. Their labor, overhead, and selling and administrative expenses are all paid when they take place. Their income tax expenses have been estimated, and they're projecting $50,000 per quarter, basically. And they expect to have adequate cash. So in our textbook illustration, we had a $30,000 cash minimum, and we would borrow if necessary to maintain that minimum. Well, we're assuming that this company is going to have sufficient cash funds and will not need to borrow in the first quarter. We know their beginning cash balance, beginning accounts receivable, and beginning accounts payable. So can we work through this information to calculate the schedule of cash receipts, cash payments, and finally the cash budget? We're only doing this for one quarter, so this is a little less complex than what we saw in your chapter walking us through all 4 quarters, but the concepts are the same. All right, so if we know that our total sales are $208,000, we're assuming that 100% of these are credit sales, unless it tells you differently. And if this is so, 75% of our sales for this particular period will be collected in the period that the sale occurs. 25% will be collected in the next period. So basically, we know that our cash receipts are going to be 75% of the current sales, credit sales. I can also determine accounts receivable at this point because I know that if I've collected 75%, what I have left to collect next period is the 25%. Hence, I can determine my accounts receivable at the end of this quarter from these calculations. The same thing happens with cash disbursements. However, we have several other places that we disperse cash instead of just one method of receipts from customers. We're paying for materials, and the text tells us that this were the purchases that we were going to need. But it also tells us that we were going to pay for 50% of these in the first quarter, and the remaining 50% will be paid in the following quarter. Okay, if there were any accounts payable before, we're going to pay those off this period along with the 50% of the purchases that we made this quarter. The direct labor, your textbook says we're going to pay that as soon as it's incurred. Overhead, we're going to pay that as soon as it's incurred. The same thing with salaries. Selling and general administrative expenses. So these are fairly basic. We pay them as they take place. We've spread our taxes out for each quarter, and we know that we're going to spend $37,000 on new equipment in the first quarter. So I can calculate my total cash disbursements of $187,000. I can also calculate my accounts payable because I know that if I only paid for $50,000 of my material purchases in the first quarter, I'm going to have to pay for the other 50% in the second quarter. So now I have my cash receipts, I have my cash disbursements, I can pull all of those numbers together for a cash budget. I know the beginning cash from the financial statement from the prior period. I've calculated receipts, I've calculated disbursements, and I now have my ending cash balance. Okay, so now we have two of the additional numbers that we're going to need for our balance sheet and our statement of cash flows. Okay, so I haven't gone through or included an additional problem to pull all of these numbers to our actual financial statements, but you can see that we have all of the numbers that we need now for the income statement. We have all of the numbers that we need for our balance sheet because we've just calculated cash, accounts receivable, accounts payable, property, plant, and equipment. And so everything now can simply be pulled from if we were doing this in Excel, it can be pulled from the respective Excel spreadsheet to a template of financial statements for our final budgeted set of financial statements: the income statement, the balance sheet, and the statement of cash flow. Okay, so be sure that you understand the order of preparation that needs to take place: our operating budget, and then which includes our sales, our production, our cost of production, our cost of goods sold, our selling and general administrative expenses. Then we need a capital expenditures budget, a cash budget, and then we can begin to pull all of this information into our income statement, then our balance sheet, and finally our statement of cash flows.